Hey guys, it's Ant-Man here. I'd like to do a trade recap on the trade I took this morning on GWW. Let me start here by pulling in my gap scanner. This is the gap scanner that I fire up every morning and take a look to see what's popping in the market. It's actually a screenshot of my gap scanner from this morning at 8:30 on 10/16/2018. Because I don't have trade ideas on this PC, but this will do. So here in the leading gapper down here is GWW, almost 8% gap down, $25 decrease in price from the close, both pretty significant. And just let me just say that this is the leading down gapper as I scan for stocks. I have certain filters set to filter out what I call garbage stocks, and so on my specific filter set of down gappers, GWW was the leading gapper this morning. Tad light on the average 3-month volume. I tend to like to see over a million, at minimum 750 on the average 3-month, but it's a stock that I've seen trade in the past. I have never actually placed a trade in GWW, but I have seen it move, and this thing can move in chunks. This thing can grow legs. So if you hit it the right way, it can be a very, very nice trade for you. Next on the list was DPW. I'm sorry, DPZ, Domino's Pizza. This one is even lighter on the average 3-month volume, just over half a million. And I've also seen Domino's Pizza trade. Not a fan of how it moves. A lot of sideways action, a lot of chop. I just don't want to be involved in something like that. Next one down was PTLA, Portola Pharmaceuticals. Not a bad trader. Good average volume here, 1.5 million. But the range on this just isn't enough for me. It's if I remember correctly, an 80 or 90 cent range on the stock. So that means to have a trade with any kind of decent profit, you need to take larger size, and larger size means more risk, which is not something that I really want to entertain at this moment. So moving on to the next one here is TWLO, Twillo. It's not a bad trader. We've traded it before. For a $73 stock, it's got good range. I believe the ATR is 4.5 or 5. Definitely great range for a $70-something stock. You don't have to take massive size to get a nice move out of this. And it does have great average volume here, almost 2.5 million. So that went on the watch list, as did GWW. Generally, I don't add stocks that are less than 3% gapping down. So that's where I stopped on as far as this watch list goes. And in addition to these two stocks here, I also had 2 stocks from my basket of stocks, my daily watchers, Apple and Netflix, in addition to Twillo and GWW. So let's pull this back out and take a look at the trade over here. So GWW. As you can see, this was a beautiful bleeder this morning. I believe from high to low, this thing moved something like 30 points in the first 10 minutes, which was absolutely amazing. My initial trade plan here was to take this if it rejected one of these key levels here. And as you can see in the pre-market, this thing was weak. Bid kept dropping, and right around here it did come back up. Temporarily broke the VWAP, but it just couldn't hold. So this thing was weak the entire pre-market. A couple minutes after the bell rang, right here you can see there's a gravestone doji that formed, rejected the VWAP, and for me that was enough to take the trade. And my risk on this would have been high of day, which was this level right here. All in all, the risk here was about $70, which is perfectly fine on a $290 stock. So I tried to get short 100 shares right here and for whatever reason, I did not get a fill. As it came into this pre-market level here, 288, I tried to get in with 50 shares. And again, for whatever reason, I did not get a fill. That's something I may have to take up with my broker. I'm not sure if it was an error on my side or theirs, but like I said, it is what it is. Didn't get a fill. And this is a trade that I knew I wanted to be in because of the range that I know that this can have. So again, around here, around the 286.5, 287 level, I tried to get in with 30 shares because at this point it's turning into a bit of a chase, but at the same time I did want to be part of the trade, but I did not want to fall victim to FOMO, so a lot of emotions going, a lot of back and forth. So for me, a nice compromise was just going in 1/3 size, 30 shares, and risking off probably the VWAP level right here. So slight modification on the fly. Still would have worked out to about the same $70, $80 risk. And the trade did work out very nicely. As you can see, this thing just dumped. And got in 30 shares here. I didn't take any profit until this level here at 274.25, which you can see is the level I have marked from my daily chart. So at this point here, I took off half of my shares, which was 15, and my plan was to let the other 15 shares ride. I was aware that there was this 270 level right here where it could find support, and indeed it did. So in my head, I was hoping that this was going to come up, test, and then fail and continue downward. But when I saw this starting to gain some strength, I decided to take it off here and cover my other 15 shares because just as easily as this thing dumped, it could run right back up and negate the entire trade. So I did play it a little safe and I took off my other 15 shares right here. So all in all, it was a 30 share trade. I made just over $400 on this trade, which works out to a 5.7 to 1 risk reward ratio, which is amazing. You know, there are traders and other individuals out there that are shooting for 2 to 1, 1.5 to 1, even 1 to 1 risk reward ratios. There are some setups that look for a 1 to 2 or 1 to 1.5, which is just beyond my comprehension. Why you would even entertain a trade where the risk reward is actually against you, but that's a topic for another video. Nevertheless, 5.7 to 1 is a great risk reward ratio, and $400 on 30 shares I'll take that every day of the week. This is a trade that today for me was a one and done trade, the way I like it. By 9 whatever time it was here, about 9:40 in the morning, I was done. I was just at that point I was charting and getting some screen time and doing some other stuff that I needed to do. And the setup here, let me talk about the setup a little bit. This was a down gap on bad earnings, and that is what my strategy is. My strategy is a short bias strategy built around the down gappers, preferably with some type of negative catalyst, be it news or earnings or what have you. And my goal is to try and catch one of these moves. Let me get this crap off the screen here. My goal is to catch one of these crazy moves down. Now, it's not every day you're going to catch 15, 20, 30 points on a down gapper, but they happen from time to time. GWW is one of them. CMG. I personally have caught 22 points on a down gap on this on just 10 shares. That was a few months back. There's a couple others that really just have this incredible range that I can't think of off the top of my head. But it's one of these things that as you as you come across a strategy and you start to backtest things and keep trading records and trading logs, you start to see what your strengths are and what your weaknesses are. And it turns out, based upon my data and what I'm good at and what I'm not good at, that my strengths revolve around a short bias trade that deal with down gappers. So that's what I went with, and that's what I work on tweaking and have worked on tweaking every day since I started trading the strategy back in it was a beginning of June, I believe, is when I started fiddling with the strategy, and it's been pretty good ever since. And of course, every day is a new tweak, and I learn something new. And yeah, I think that's about it on the trade. Now there's going to be some of you out there, I know it, that are going to say, well, why are you only taking 30 shares? You know, this could have been an absolutely massive trade. Had you taken, say, 300 shares, you would have made about $4,000, and yada yada yada. Yeah, I know. I'm well aware of that. I can do math. At this point in my trading journey, I'm not at that point yet. I'm shooting for consistency, and that's where I'm at right now. And that's the mistake that, just to not go off on a tangent, but that's the mistake a lot of new traders make. Is me being one of them. Is they believe that you have to go in with massive size, expose yourself to all this crazy risk, and then more often than not, you wind up getting your ass handed to you, and it's accounts blow up, and you take these huge P&L hits, and it's just not a good place. It's not good on your emotions. It's not good on your mental state when you're trading. That way, as time passes, as you build confidence, as you build skill, and you gain experience and screen time and all that other jazz, you can slowly size up, and you will be able to deal with the losses a lot better and a lot easier, and some of the other negatives that come with trading. So this is where I am in my trading path. And if you want to learn more about how I came to this trading path and this style of trading, I encourage you to visit tricktrades.com. Pat Mitchell is the head trader there, and the man has turned my trading around. And I say that without reservation. He has absolutely turned my trading around from someone who's more or less self-taught. I've been in a couple other chat rooms and a couple other services that they can't hold a candle to Trick Trades. It's an absolutely amazing service, and I'm not just saying that. I absolutely mean it with every ounce in me. And if you're not here, I encourage you to come by, take a look, and I'm pretty sure that after spend a month with us or so, give us a try, you'll be convinced and you'll want to make the switch as well. Just what Pat has done for me, he can do for a lot of you out there that might be at the wrong place right now and just need that extra hand. So I'll leave a link in the description, and I hope you'll give us a look. And that's about it for me. So I'm signing off for now. Have a good night, guys.